Hi everybody, this is AJ speaking. This video is about the key points from Microsoft's 4Q results with regard to Nvidia. Microsoft is a critically important customer to Nvidia. But before we dive into the financials of Microsoft, let's first look at this chart. This chart shows Microsoft's share price development, and this is over the last 5 years, and you can see the stock is up 125%. However, the most important number with regard to Nvidia on this slide is this number. This number is the market capitalization, or the value of Microsoft. And Microsoft's value as of recording this video is $3,090 billion or $3.09 trillion. And this is what everything is about with regard to Nvidia. So why does the market cap of Microsoft matter so much to Nvidia? It's all about, so first of all, let's kind of recap what market cap is. Market cap is the net present value of the expected future cash flows of Microsoft. That's the definition of market cap. And now put yourself into the shoes of the CEO of Microsoft. With this kind of market cap, over 3,000 billions, your primary task is to make sure the market never doubts your free cash flow generation in the future. Because if the market perceives you as not becoming one of the leaders in AI, this market cap will quickly collapse. And then the second thing, keep in mind, you are running one of the most cash-rich corporations in human history. So you are literally awash in money. You have absolutely no capital constraints. So, given this huge market cap, what's the obvious strategy? You want to make damn sure you're gonna win the AI race, or at least you're amongst the top companies in the AI race. And this is from a strategic level, which drives all these CEOs from all these top companies that have tons of money. And this is precisely why they spend huge amounts of money on everything that can give them some kind of edge. So when you see all these people talking about all this minutia around Nvidia, demand, and there's more efficient model, here's DeepSeek, yada, 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 this is all kind of a secondary consideration. Because what these CEOs will do, they will use all these efficiency gains from DeepSeek, but they will also not ease off in terms of spending on an Nvidia product, because they will try to use every edge they can, because it's all about defending this crazy large number. That's the name of the game. That's the name of the game, not only for Microsoft, the same from Apple, Meta, of Alphabet, name it. All the top companies, this is the name of the game. So with that out of the way, and we touch on this point at the end of the presentation, let's dive into the performance of Microsoft. So first, let's start with revenue. You can see the business, and keep in mind, this is on enormous scale. The business keeps growing like weeds, double-digit year-on-year growth rates, 6% in the fourth quarter of 2024. And one side note here, I'm showing all these quarters in line with calendar quarters. So for example, the fourth quarter is the months of October, November, and December. But the fourth quarter in Microsoft language is actually a different quarter. In Microsoft language, the fourth quarter is actually the second quarter of 2025 fiscal year. We'll touch upon this later, but throughout this presentation, I will use this more intuitive labeling because it's less confusing. So keep that in mind. So anyway, so Microsoft delivered almost 70 billion in revenue, significant growth, continues and for many, many quarters. Gross profit, so after you take off the cost of sales, gross profit reached almost 50 billion, or just under 48 billion, also significant growth rate, double digits, also for many quarters ongoing. So the business is doing exceptionally well, keep that in mind. Operating profit, same story, new all-time high, almost 32 billion in operating profit, which is kind of ridiculous. And business keeps growing double digit year on year. So this is for very good reason. This is often the most expensive company or most valuable company in the world, and sometimes it's trading places with Apple. But when you look at these numbers, you see why Microsoft has a ginormous market cap. And when you look at net income, pretty much the same story. Net income came down a little bit, 2% sequentially, but still is up 10% year on year, and to a ridiculous 93 billion in net income. Most companies never even have this much in revenue. And then when we look at the sort of the key metric for any business over the long run, which is free cash flow, we can see, and this is free cash flow including M&A, and I will also show you also free cash flow in a second excluding M&A, and you can see there was some significant volatility. And here, this one where the business in 4Q 2023 dropped to negative 56 billion was simply caused by this huge Blizzard acquisition Microsoft did. And there was also some M&A in fourth quarter of 2024. And that's why the free cash flow decreased to 5.1 billion. Now, when we look at the free cash flow excluding M&A, we can see it's a little bit more, 6.5 million. But you might think, oh, it's still kind of crashed down. A few notes here. Just look at this time series. What do you notice? Cash flow always, excluding M&A, always drops in the fourth quarter. There's significant seasonality. It has to do with various things I won't get into in this video, otherwise it gets too long. But just remember there's seasonality, and that explains the drop in free cash flow. The business is still doing exceptionally well on a cash flow basis. And then when we sort of dissect the cash flow a little more, operating cash flow, you can see was the main driver of the free cash flow reduction, because capital expenditures, we get to it in a second, didn't increase that much. So something happened in operating cash flow that explained the free cash flow drop, because remember, free cash flow is operating cash flow. Less capital expenditure gives you free cash flow. So here the operating cash flow came down quite significant, and the main driver of this was a substantial increase in receivables. Receivables was a positive driver in the third quarter of 14 billion, and now in the fourth quarter, this was a negative 6 billion. So there was a swing of 20 billion, and this shifted led to the decrease in operating cash flow sequentially. You can see here the number, 35% decrease. But as I said before, you can see the exact same pattern in prior 4Qs. So this has to do with the receivables. So that was the main driver. And then when you look at the capital expenditures, so this is where we get now close to the Nvidia topic. Because capital expenditures, you can also call it investments. Most of the money that you see here is going into Microsoft's compute infrastructure. This does not only comprise of Nvidia products, but a significant share of this spend goes directly to Nvidia. And you can see this has been increasing quite substantially, but also keep in mind the business has also been increasing quite substantially. But of course, in terms of the growth rates, CapEx has outpaced total revenue growth, obviously. But keep in mind, these are not short-lived assets. These are assets that generate or help to generate revenue for several years. So it's not an apples-to-apples comparison. But when you look at this CapEx spend, you can see that in 2024, Microsoft spent almost 76 billion, and that's the key number. That's an increase of 84%. And in 2023, CapEx increased 45%. And here it's good to remember what happened. Already in 2023, people talked about, Nvidia key customers can't keep spending this much. Now, fast forward 4 quarters, and we see they can easily spend this much. Number one, because they are extremely cash generative businesses. If you look at Meta, Alphabet, Amazon, Amazon to AWS, I should say, they all generate a lot of cash, and that cash basically financed all these AI investments. And then when you look at Microsoft's quarterly trends, Microsoft kept increasing, and there was also some interesting demand patterns. So you can see that Microsoft tends to keep spend relatively within sort of the same range. Then it goes to a new level, keeps it on that level, keeps it for several more quarters. And so, for example, to be specific, if you look here, September 2022 to March 2023, similar level. Then Microsoft moved up to a new level between June 2023 to December 2023, around the call it 11 billion mark. And then there was another step up. And we get later to sort of the forecast, which is based on Microsoft's guides, and you will see the sort of the same or a similar pattern. And then on this slide, you can see Microsoft's cash balance. At 72 billion, the business is still very well capitalized. That balance, Microsoft kept constant and when you look at this sort of a long-term perspective, that balance is actually lower than it has been in a long time, given the growth of the business. Keep that in mind, because 50 billion in March 2022 you cannot compare with Microsoft today. So 45 billion is relatively speaking a lot less than it would have been in March 2022. So just keep that in mind. So debt level is by historic standards in Microsoft relatively low, so there's debt capacity. Definitely. And then when you look at the margin trends, so as happens quite often in Microsoft's case, margin tend to trend down in the fourth quarter. And when you look at this time series, you can spot this pattern quite easily. So, but margin, when you look at this is still crazy high. Of course, it's a software business. Gross margin, almost 69% is like absurd. Operating margin, almost 46% is also every business kind of dreaming about these kind of margins. And then net income margin is almost 35%. So these are like crazy strong margins on a super large scale. So keep all these things in mind. So this business is doing phenomenally well, and that's why the CEO just got a huge comp package, because it's also very, very well run and by probably one of the best CEOs that you can have right now. So keep all these things in mind. So now we look at the guidance they provided a few days ago. And so when we read through this real quick, and here this is a bit confusing because we have to take into consideration this fiscal year difference in Microsoft. So when they talk about the 2Q, the 2Q is the fourth quarter, so the most recent quarter that closed. That was the 2Q. So when they say we expect quarterly spend in Q3 and Q4 to remain at a similar levels as our 2Q spend, what they mean is we expect in 1Q 2025 and 2Q 2025 roughly the same spending as we spent in the fourth quarter, because the 2025 fiscal year runs until June 2025, and so the second quarter, the second calendar quarter of 2025 is actually Microsoft's fourth quarter of the fiscal year 2025. So it's confusing part. And then the fiscal year 2026 in Microsoft talk starts from the third quarter of 2025 and runs all the way to the second quarter of 2026. And then the last piece we need to take into consideration is they say, however, the growth rate will be lower than financial year 25. So this is a very important piece, and we will look at it in a sec. I repeat, the growth rate will be lower. It doesn't talk about the absolute amount. It talks about the growth rate. It's an important distinction. So and now we put everything together. So the blue bars is the actually reported CapEx spend. And these first two gray bars, all 22.6 billion, is based on this guidance. Quarterly spend Q3 and Q4 will be the same as Q2. This is what I've done here. And then last bit, growth rate will be lower than the one in financial year 2025. So now we need to look at the financial years, and keep in mind the financial years start from the third quarter and goes all the way to the second quarter of the next year. So when you add up the correct amounts that match Microsoft's fiscal years, you get to these CapEx numbers. So full year 2023 is reported. We know in that fiscal year, Microsoft spent 32 billion. The year after, they spent 56 billion. It was a 75% capex increase. And then in the fiscal year 2025, again, this has not yet closed. We are missing 2 quarters, 1Q 2025 and 2Q 2025, to know this number for sure. But based on the guidance they gave us, we can make a quite accurate assessment, because they told us already those 2 quarters will be similar to the fourth quarter of 2024. And therefore, for Microsoft's fiscal year 2025 ending in June 2025, capex will be just under 90 billion based on their guidance, and this would imply a 58% year-on-year growth. And so now we got to the key number that we need to assess these statements. They said the growth rate will be lower than financial year 2025. We now know the growth rate will be 58%. It will be lower, but this is kind of a ridiculous statement, because given this enormous scale of capex spend and this huge growth rate, of course, the growth rate has to come down. So technically, I mean, it's kind of a silly statement, but this could mean they grow at 50% in 2026. Of course, I don't assume that. So what I've done here in this chart, I just said, okay, fine. I take 1/3 of this fiscal year 2025 growth rate. This implies 90%. I apply this to year-on-year growth rates to extrapolate the 2 missing quarters for the calendar year 2025. So this is 3Q 2025 and 4Q 2025. And the numbers that you see is the result of this calculation. So you simply apply a 90% growth rate to the prior year's same quarter, which is here September 2023, and then you end up with these numbers. So when you add this then up in this calendar year 2025, you see then that in 2025 for the full year, Microsoft on this logic will likely spend just under 100 billion on capex. In 2024 calendar year, they spent just under 76 billion, and the year before they spent just over 41 billion. And keep in mind, in end of 2023 or middle of 2023, people already talked about how companies can spend at this level, because they have kind of because they always look at these numbers way too simplistically. You have to keep in mind companies like Microsoft, what they've done, and they still do it. They do lots of share buybacks, etc., to return capital. But they also then go to they also look for large scale M&A. And you saw the Blizzard acquisition. So they try to invest in other ways. But now they have a very clear objective, and they need to be leader in AI. That's the primary objective. And one thing you have to do anyway, you need compute. How much compute? It's a good question. But again, it's about several thousand billions in market cap, and you cannot risk, trying to be, stingy on your compute expense. So that's why even overspending 100 or 200 billion on compute, which is highly unlikely useless. You will be finding uses for this. But even if it's completely useless, completely waste of money, for the sake of argument, just assume that if it helps you defend lower risk that your market cap is facing, it's completely worth it. It's kind of a no-brainer. And this is why all these CEOs have made similar comments in this regard. Like there was, I read one comment, it was about the Google founders, and supposedly one of the guys said he rather goes broke than losing the AI race. Zuckerberg at Meta also made similar comments. So these people, they don't care about overspending 10, 20, 50 billion on Nvidia products. So before I let you go, we're at the end of this video. So the bottom line is a key Nvidia customer, Microsoft, intends to spend even more on infrastructure, which implies not necessarily they're going to buy a lot more Nvidia product, but it's highly likely they will at least maintain sort of their purchase rate, or not substantially cut down on the Nvidia product purchase rate, so they can make sure they never fall behind in infrastructure, because if you're doing the AI race, it can quickly be over. So with that, I will close this video and hope to see you next one. Bye bye.